All right, welcome everyone to the deep dive. Today we're jumping right into some pretty big economic news, those tariffs that former President Trump just announced on April 2nd, 2025.
Definitely a big one. We've been going through the CryptoTech Today Talks podcast. They had
Right.
a really good breakdown of all this, and it could be a big deal for everyone, really.
Yeah, no kidding. And for everyone listening, we're going to try to break down the potential impact of all of this, from how much your groceries cost to what's going on in the crypto world. So first off, can you give us a quick rundown of what these tariffs actually are?
Sure. So on April 2nd, there were two main things announced. First, there's a flat 10% tariff on everything, and I mean everything, imported to the U.S. That covers just about anything you can think of, from clothes to electronics. If it's made overseas, it just got a 10% price hike.
Now, a 10% blanket tariff on all imports. That's going to add up fast. And I know there were also some country-specific tariffs, right?
Exactly. Starting on April 9th, these tariffs go even higher for certain countries. For example, China is now looking at 34%, India 26%, and Vietnam a whopping 46%.
Ouch.
Yeah, pretty substantial. And then you've got a bunch of other major economies, Japan, the EU, Taiwan, and others. They're all facing tariffs somewhere between 20% and 32%.
So those are some huge increases, and they're justifying all this as economic self-defense. What exactly does that even mean, and what are they hoping to achieve?
Basically, they want to make imported goods so expensive that American shoppers and companies choose to buy American-made products instead. This is supposed to help American manufacturing, bring jobs back to the U.S., and reduce our reliance on foreign supply chains. Think of it like a smartphone. Those components come from all over the place, and these tariffs add cost at every step. The idea is that higher import prices will encourage more production to happen domestically.
Right, so boost American industries. But the analysts at the CryptoTech Today talk said this move is already causing a stir internationally. What kind of global impacts are we talking about?
Well, it's introducing a lot of uncertainty into global trade, right? Businesses that rely on importing goods or exporting parts, they're suddenly dealing with a whole new cost structure. And it's a very volatile situation. This kind of thing can disrupt global supply chains pretty fast. Take car manufacturers, for example. They often source parts from different countries, and these tariffs can add significantly to their production costs.
And that brings us to the big worry on everyone's mind. Inflation. How do these tariffs actually translate into higher prices for the everyday person?
It's pretty straightforward, economically speaking. When those imported goods become more expensive because of the tariffs, the companies that import them have a choice to make. They can either eat that extra cost, which cuts into their profits, or more likely they pass that cost on to the consumer, that's you and me, in the form of higher prices.
So basically the raw materials get more expensive, and so the final products on the shelves cost more too.
Exactly. And that, in a nutshell, is inflation paying more for the same stuff. Like that podcast said, your dollar just doesn't buy as much as it used to.
Right. And if everything from food to gas is potentially getting pricier, you'd think people would start watching their spending, which could slow down the economy as a whole.
Absolutely. And that's where the risk of recession comes in. If people are paying more for essentials, they have less money for other things. They might put off buying a new fridge or cut back on eating out.
Makes sense. If my money isn't going as far, I'm going to focus on the essentials and skip the extras.
Right. And when everyone starts spending less, businesses feel it. Their sales go down, profits shrink. They might start looking for ways to cut costs. And often, the biggest cost for a company is its employees.
So less profit could mean job cuts. And if more people are unemployed, there's less overall income, which leads to even less spending. It's kind of like when you skip your morning coffee and end up less productive, making you want to cut back even more. It sounds like a tough cycle to escape once it starts.
It really is. The podcast called it a chain reaction that's hard to stop once it gets going. And that's a recession in a nutshell, a shrinking economy.
So we see how these tariffs could really kickstart inflation, and how that could then make a recession more likely. Now, CryptoTech Today Talks also talked about a pretty big player in all of this, the Federal Reserve, and how they might react. Let's talk about QE and QT. For folks who aren't familiar, what do those terms even mean?
So QE stands for quantitative easing. Basically, it's the Fed injecting money into the economy. They do this mainly by buying things like government bonds.
So they're essentially creating more money digitally to stimulate the economy.
In a simplified way, yes. The goal is to lower interest rates, making it cheaper and easier for banks to lend money. This encourages businesses and consumers to borrow and spend more. And according to that podcast, the crypto market usually does pretty well during QE periods.
Why is that? Does more available money lead to more investment in riskier assets like crypto?
Exactly. With more cash flowing around and cheaper borrowing, investors get a bit more adventurous, looking for bigger returns. That often means more money going into things like crypto, especially altcoins. More money in the system generally creates a more bullish feeling in the crypto market. Then there's QT, or quantitative tightening.
Which I'm guessing is the opposite of QE.
It is. QT is when the Fed reduces the amount of money in the economy. They do this by selling those assets they bought during QE and by raising interest rates.
So the money supply shrinks and borrowing gets more expensive.
That's the idea. QT usually aims to slow down an overheating economy and fight inflation. But as the podcast pointed out, the crypto market usually doesn't like QT very much. Less cash and less hype can lead to lower prices.
So where do these new tariffs fit into what the Fed might do next?
Well, if these tariffs do cause significant inflation, as we've been talking about, the Fed might feel it has to step in and try to control it. And their main tool for that is usually tightening monetary policy, which could very well mean more QT. That possibility of more QT is a big part of why we're seeing some anxiety in the markets right now.
Which leads us to the crypto market's initial reaction. CryptoTech Today Talks gave a snapshot of what things looked like on April 3rd, 2025. What were the major moves?
Pretty much everything was down. Bitcoin was trading around $82,500, which was about a 3% drop. Ethereum was below $1,800, down about 5.5%. And then you had XRP, Solana, Cardano, Avalanche. They were all down somewhere between 4% and 6%. Even other altcoins like Toncoin and Phantom were feeling the pressure.
Sounds like a widespread dip across the board. Did those analysts offer any insight into why the market reacted this way?
They pointed to three main things. First was, you guessed it, fear of inflation, which is tied directly to those new tariffs. Second was the possibility of the Fed going back to QT to try and fight that inflation. And third was this overall tightening of financial conditions. When things get uncertain, investors tend to move their money into what they see as safer, more established assets. It all comes down to investor sentiment, how optimistic or pessimistic people feel about the market.
So it's all connected. Tariffs could lead to inflation, which could make the Fed tighten monetary policy, and that tightening spooks the crypto market, leading to sell-offs. But CryptoTech Today Talks did mention a potential upside, a little glimmer of hope.
They did. Their argument was if inflation gets really bad and starts to hurt the overall economy, the Fed might have to reverse course. They might even go back to QE to try and support the economy and prevent a deep recession.
Interesting. And how would that kind of move affect the crypto market?
They said another round of QE could be a big boost for crypto, especially those altcoins that have a real-world use and aren't just speculation. The idea is that a fresh injection of money into the system would get investors excited about riskier assets again.
Okay, so more QE could be a shot in the arm for crypto, particularly for projects with strong fundamentals. CryptoTech Today Talks also honed in on a specific altcoin called Verasity, or VRA. Why that one in particular?
They used Verasity as an example of what they called a high-risk, high-reward altcoin. It's a smaller cap coin, which means its price tends to swing more wildly compared to the big players like Bitcoin or Ethereum.
And how would QT, with its tighter financial conditions, affect these smaller coins like VRA?
Well, when QT kicks in and money gets tighter, those smaller altcoins usually see less trading volume and less interest from investors. When things are uncertain, investors tend to stick to what they see as safer bets.
But if the Fed shifted back to QE, things could change quite a bit for VRA and similar altcoins.
Definitely. CryptoTech Today Talks suggested that if we do see more QE and that fresh wave of money coming in, platforms with real tech and utility, which is how they described Veracity, could see a really strong comeback. More money and a risk-friendly market could definitely attract new interest and investment in projects like that.
So their advice for anyone holding Veracity was to basically stay informed and be patient, because those big macroeconomic trends have a huge impact, especially on these smaller digital assets.
Exactly. It just goes to show that even with crypto, seemingly its own little world, the bigger picture of the economy and what central banks do plays a massive role in how the market moves and how investors feel.
Okay, so let's sum this all up for our listeners. What are the main takeaways from today's deep dive into the possible fallout from these tariffs?
The big picture is these tariffs are likely to make a lot of goods more expensive, which could lead to higher inflation. That inflation could then make people spend less, increasing the risk of a recession. And a big part of what happens next depends on the Federal Reserve and whether they decide to ease or tighten monetary policy. And then, of course, the crypto market, especially the more speculative altcoins, reacts very strongly to these big economic shifts and to whatever the Fed decides to do.
So right now, it seems like the market is in a holding pattern, waiting to see what happens with all the uncertainty these tariffs have created.
Exactly. But like that analysis said, this period of uncertainty and possible market dip could also be setting us up for a much bigger move, one way or the other. It all depends on how all these economic factors play out and how the Fed responds.
So to leave our listeners with something to think about, given all this potential for economic change, the impact of the tariffs, the risk of inflation, what the Fed might do, and how sensitive the crypto market is, what are some strategies people could explore to navigate this complex and uncertain situation? What could they do to be prepared for the opportunities that might come up, whatever those might be?